What's going on, guys? It's going to be our Summary Markets episode 149. As always, we're going to talk about ES, NASDAQ, Bitcoin, Ethereum. We're going to get into gold and oil and talk about some forex pairs with the dollar and the euro as well. So because this video is coming out so late due to Christmas holidays, we are going to do this a little bit different on this video. So instead of giving my outlook on the week for these indexes, we are going to give a longer term outlook looking at the daily, the weekly, and the monthly. And then next week on Sunday, or this week on Sunday, I should say, we will go back to the standard trade plan for the week. But because today is Wednesday, I can't really give you guys the trade plan for tomorrow and Friday. I feel like that's a waste of a video. So we're going to do more of a longer term analysis here, and hopefully you guys enjoy. So starting off with ES here, looking at the daily, we are failing this monthly VWAP. We typically like to see the monthly VWAP closes on the indexes. So the monthly VWAP close for November would have been this price around 39.11 to 39.15. Now, typically these levels are going to act as very strong magnets, and they're going to look for bounces or rejections on those levels. So as we can see back here, we bounced off that one, rejected that one, kind of rejected that one, bounced off that one. Same thing here, bounced, rejected. So we can see just on this small time scale here, going back a couple of months, we have been respecting these levels. So seeing what we're doing right now, this is definitely very bearish. We lost the monthly VWAP close in November, came back to retest it, and we lost it again. So definitely not looking too good going into the yearly close. Now, the next monthly VWAP support would be around 37.25. So if we do continue to pull back to the downside, that is the obvious support that we will be looking for. If it does not maintain that support, then you are most likely coming down to retest the low of that accumulation, which would be around 3,500. Okay. So looking at the weekly here, let me actually get rid of these monthly VWAP levels here. So we did fail the OTS trail a couple of times, basically all the way down. We had the all-time high here, failed the OTS trail there, failed it there, and then failed it there. So we did have a couple of candles try to break through that level, but you were not able to flip the OTS trail to being bullish. So we've been bearish since, let's see here, February 14th of 2022, and we are maintaining that bearish trail right there. So we did get a sell signal about 2 weeks ago, and now we are heading towards that 200 weekly moving average, which is around that 3,700 mark. Now, we could argue this is a very choppy inverse head and shoulders, or maybe even a Quasimodo as a reversal pattern, but it just doesn't look very good going into the close of the year because we don't have any buy pressure coming in where we typically is the most bullish time of the year. So the Santa Claus rally, the November to December months are typically historically very bullish, and we are not seeing that bullish momentum going into the close of the year. So this does not look very good. I would not say this is an inverse head and shoulders unless we start to find some support, possibly around that 200 weekly average, which once again is around 3,700. So if we can start bouncing off that level, then we can look for that OTS trail around 3,900 to 4,000. And if we can hold back above that, then we could argue we are back into a bullish territory. But that is obviously a long ways away. We're predicting a lot of things that are not happening just yet. So I would not be bullish as of right now. Moving on to the monthly, this is the scariest chart of all of them. So I know we don't have a whole lot of data on the monthly with regards to the indicators. So looking back into the 2000 crash, in the '08 crash, we did have a trail flip red in both of these major market crashes, and they did not flip green for, let's see, about 3 years on both of them. Yeah, about 2 to 3 years on both of these red to green flips. And typically we see it flip red, and that's like the start of the actual sell-off. So yes, it was selling off for a little bit before it flipped red, but once it flips red, then it starts to get very ugly after that trail flip. So if we look at this trail flip here, it lost about 30 to 40% after that flip. Let's look at this one here. Same thing here, lost about 30 to 50% on that sell-off. Now, like I was saying earlier, this has only happened 2 times in the history of ES. So it is 2 for 2, but that's not a very good sample size, right? But we are getting a red trail flip. If I zoom in here, you can see the monthly is actually flipping red in December right now. This tried to flip red in November, but it actually closed green. You flipped it back to being green because the close of November was actually fairly bullish. This will not flip back to being green unless like the last 2 days of December are straight up and it goes up like 300 points. Highly unlikely. So this will most likely, probably 99% chance, it will be a red close, and it will be the first red close since the flip of 2008, June 2008. So definitely not looking too good there. That would obviously be a pretty far away, 4,200. We're looking at a monthly time scale here. This would not be for scalping purposes. That's about a 400-point difference than where the current price is. So yes, we could pull back 200, 300, 400 points, but that would still be seen as bearish with this trail flip, okay? So any pullback to 4,000, 4,200 would be seen as bearish in the longer time scale, looking at the monthly, okay? Now, we don't have any very obvious targets on the monthly for you guys that are long-term traders, but what I would look at is kind of the top before COVID, which lines up with this bottom after COVID. So we had the top before COVID, it nuked, it came back up, gave you a little retest, and then you bottomed and went on a massive run there. So on the longer time scale, that is the obvious support and resistance level I would be keeping an eye on, which once again, we're looking at the monthly time scale. It's pretty far away. That's going to be about a 500 point to 10 to 15% drop from where we currently are. Okay, so if we do start to get down to those levels, maybe later next year, maybe Q3, Q4 of next year. I mean, hopefully it would take that long to get down there. Hopefully it wouldn't get down there in Q1. But let's just say it gets down there in Q3, Q4. If we do start seeing a lot of support around that area, that is when I would start to look for dividend stocks and start looking to build my portfolio in those sectors that we think are going to outperform. If you guys have been in the Discord or on the stream for maybe 2 years or so, you've seen us trade a few sectors. So like the shipping sector plays, the gold and silver, the lithium, that sort of thing. So when we start hitting these major macro support and resistance levels, I like to look for those sectors that I think are going to outperform, and that is how we build our mid to long-term portfolio. Now, I'm a scalper, I'm a day trader, so when I say long-term, I'm not talking 5 years out. I'm typically only talking about 3 to 6 months. I know by the textbook that's not really long-term. That's not even long-term for tax purposes. But as a scalper, that is very long-term for me. So know that when I say long-term, when I'm taking these positions, it's typically a 3 to 6 month period that I'm looking to close them, maybe a year tops. I don't like holding things for very long. Okay, but that is my outlook on ES, and NASDAQ is basically the same story. So the big difference with NASDAQ, let's go back to the daily here. Let's throw back on the VWAP. The big difference with NASDAQ, as always, NASDAQ is leading. So it's already doing everything that we said, but it's ahead of ES. So you failed the monthly VWAP back here. You retested it on this candle just barely, and then you started to fail. And now we are already going for that accumulation low sweep as we talked about on ES. So look for this accumulation low, possibly down to 10,600, 10,500. You might test that level, get a little bit of liquidity there, and it might try to sweep it and come back up. If it doesn't do that, we have to go to the weekly. And on ES, we would be targeting that weekly 200, which is kind of down here. You're not down there on NASDAQ. You're already below that level. So that weekly 200 is already being lost. So once again, we have to go to a higher time scale and see if we can find any major macro support. And the same level on NASDAQ is kind of in the same area as it was for ES, but there is no retest on that area. So looking at this pre-COVID high, we do not have that pullback. The pullback on ES, this pullback right here, came all the way back down to that pre-COVID high, and then it bounced. We do not see that on NASDAQ. NASDAQ's pullback was much higher, so we didn't get that very clear support and resistance flip. So looking at these two levels separately, if we took the low, and let's just mark out like a horizontal here. If we took the low, we are testing that low right now. So if we lose that low, which is basically the accumulation low that we were just talking about, that 10,600 level, the next major macro level would be the pre-COVID high, which is around that 9,000 to 9,700 level. Okay, so for you guys that are trading very long-term, looking on the weekly to monthly basis, that would be the best macro support if this local level is lost. Okay, so keep an eye on that 9,800 down to about 9,000. All right. All right, moving on to Bitcoin. So let's start off with the daily as we do. I actually have this drawn out on my other chart. Let's go to our other chart here. So looking at the daily on Bitcoin, not much has changed since our last few summary markets. You're still stuck inside that massive range. And basically what I think it's waiting for is this FTX drama to kind of die out. It's waiting for those headlines to stop coming out and people to kind of regain confidence in the crypto market. Right now, basically everybody is scared to throw their money on these crypto exchanges, especially if it's a lot of money. They don't want to trade on like Binance or FTX. Well, obviously they can't on FTX, but any of the big competitors that are like FTX, they cannot or they do not have confidence putting a large amount of money onto those exchanges. Like for me, take me for example, I don't want to put my money anywhere besides Coinbase, and Coinbase is still even a little sketchy. But as far as US citizens go, it's the best option. We can't really trade on any of those other exchanges. So we just kind of pick our poison. But people are still scared to put their money out there. And I think until that kind of dies down, crypto will remain in a bear market and it will remain kind of looking like this. Stair-stepping downward, long accumulation periods, very large impulse down moves when you do finally break those accumulation. So for this chart, for an example, if we do start breaking this 15,500, the impulse down will most likely be very bloody, and it will most likely be coming down to like 14,000, possibly even 12,000. So that would be about a 10 to 20% drop from the current prices. Okay, so if we do start to lose that accumulation low, it will most likely be a cascading failure, just as we saw on these local impulse downs. Okay. Looking at the weekly here, let me actually go back to our other chart. And let's look at the weekly here. So the weekly trail has been red for a very long time. You flipped way back on January 2022. We lost the 200 EMA way back here on June 2022. And we just haven't even retested the OTS trail since then. So looking at some macro support here, the first major level would have been that previous all-time high. That has been lost. The next major level would be this previous all-time high, so right up here. And then if we lose that, the next major level would probably be that all-time high, or sorry, that high right there. That wouldn't be an all-time high. But you have to take it year by year, right? So we have the 2017 high, we have the 2019 high, and then we have the 2020 high before it broke out with COVID. So those would be the three major macro supports moving forward. And we've already lost one of them. So we lost this level here. The next level would not be until 13,800, which lines up with those levels we talked about earlier, around that 14,000 to 13,000 mark. And then below that, you don't really have any major support until that 10,500, which I like that level a lot because it lines up with the start of that major impulse. So when you have these really long major impulses on crypto, you always want to look for that point of origin. So the point of origin would be right there around that 10,500 to 11,000 area. So for you macro guys, the guys that like to trade the weekly to monthly time scale, that would be the most important level, I think, on this entire chart. But before we get down there, you could keep an eye on that support around that 13,800. Okay. Moving on to Ethereum. Ethereum is basically the same story. We flipped red on the OTS way back here in January of 2022. We had a couple of retests of the OTS trail and it failed basically every single time. You failed the 200 weekly as well. And we do have a little bit of support coming in on these pivots. So we have a couple of long-term weekly pivots around this, what is that, 1100 to 1200 area. And we're kind of creating a double bottom off of this level, but it doesn't look like it's going to hold for much longer. If we look at these local levels, we're just putting in lower high after lower high. So not a good sign. If we lose this pivot, it will most likely lose this low very quickly. And then we have to go once again and look for those macro supports. The problem with Ethereum is this impulse was so strong, so quick, you did not build a whole lot of support below this 1,000 level. Okay, so we can zoom out and we can grab some older levels. Like we can grab this previous all-time high here. We can grab the 2019 high as we did with Bitcoin. And then we can grab kind of the pre-COVID high. The problem is, look at where these levels line up. These levels line up way down here at like the 300 to 400 level, leaving a major gap in between 400 and 1400. So to look for supports in that area, we have to grab some kind of low value supports inside this impulse, which goes from 360 all the way up to 1400. So there are a couple levels we can look at in between this impulse. The first major level would be, let's see here, one sec. We need the horizontal ray. There we go. It would be this level right here, that pivot around 600. And then we have that pivot around 1260. That's already being tested. And then the point of origin of this entire move would be down here, once again, around that 360. We could say this is a point of origin as well, because you can see it started to ramp up very heavily once it broke that kind of 600 to 700 level. So you could argue there's a couple of point of origins here, one being there, one being there. And then if you really wanted to argue, you could say the real point of origin is way down there. But we're not going to look for $120 on Ethereum when we're currently trading at around 1200. Okay, that'd be a 90% failure. But moving forward on the macro timescale, obviously looking at a weekly to monthly basis here, if we do lose this low, there is realistically not a lot of strong support in this area right here. You could fall down to 600 pretty easily. Now, obviously, there is some support levels in between. If you're looking at the nice round numbers, 600, 700, 800, 1,000 obviously would be a nice round number that people want to bid. But if we're talking about value, like true value on a volume sense, volume profile, market profile, whatever you want to use, on an order flow sense, there is not a lot of value in that area. It has not been retested enough to really determine that there is significant value there. That's obviously if this low has been lost. Okay, so for you macro guys, if you lose this low, I would be very careful bidding those lower areas until you start to get down to at least 600, maybe 700 at the highest. Okay. All right, let's move on to oil here. Let's start off on the daily. And once again, we have oil charted. So let's go look at our other chart really quickly. So oil on the daily here, you can see we're still holding that bearish channel. We did retest the top of that channel beautifully yesterday, and we failed that channel almost to the dollar on that upper trend line. So pulling back to support around that previous low, around the mid 70s. If it does start to lose that level, it will most likely come down to around 72, maybe even the low around 70. Now, you could argue that this is an inverse head and shoulders, so you could argue that we have a left shoulder there, we have a head there, and then we have the right shoulder coming in right now. This would be a pretty sloppy inverse head and shoulders, but you would still need to break through that major resistance going into like 83, 84. If it does start holding above that level, then you could start to lean bullish, above 83. But long term, you still would not be bullish until we start to reclaim these trail levels. So let's go back to the weekly here. And let's get rid of log really quickly. If we start to reclaim the weekly trail around 87 and start to flip that into being green, then we can start leaning bullish mid to long term. Now, we are bouncing off the weekly 200 for oil. This will be the first major 200 EMA retest since that negative nuke way back in like COVID. We broke it in January 2021. We never retested it. So we are retesting it here for the first time in what, about 1-2 years almost. So there is a lot of support around those low 70s. We do want to see the break above 88. Then we can start talking about some of these monthly to weekly resistance levels that we want to target, which in this case, most of them line up around 100 to 120 if we're talking long term. I do really like this support on the monthly to weekly level because doing what we did on ES and NASDAQ, looking for those previous highs and looking for kind of the support and resistance flip, we can see a very obvious flip on oil here. You had that old high around the mid 70s, the old low here around the high 60s to low 70s, and now we are retesting that level yet again. So obviously oil is extremely fundamental. It's hard to do some long-term analysis on a weekly to monthly basis on oil because we have all the OPEC news, supply and demand news, etc. But these are the levels that I would be keeping an eye on. So 70, mid 60s as a major support, and then you want to get above the high 80s to go into a bullish trend. Then you would be targeting the 100 level, possibly 115 to 120. All right, bear with me. We've got a couple more. I know this is a little bit longer than we typically do for these videos. All right, going into gold here. Let's take a look. So gold on the weekly is very sloppy. You're kind of in a major distribution, so we have like a very obvious distribution happening here after that impulse for the first, 1, 2, 3 years of COVID. So started around the bottom of 2019, started impulsing in COVID. So about the first 1 to 2 years of COVID, it was running, and then you started to top out in 2020. And we've been ranging ever since. So we are hitting the 200 EMA on the weekly. So a lot of support coming in around that 1700 area. You've been running pretty hard for the last couple of weeks, but look at the last 1, 2, 3, 4 weeks. Or I should say the last couple of months, sorry, we were running, and now we're topping the last couple of weeks here. You can see a very obvious seller demand around this 1800 to 1840 zone because 1, 2, 3, 4 weekly candles have had top wicks in this same area. So until we can start holding back above like 1840, 1850, this looks like it's definitely topping out for the short term. Now, if we go to the monthly here, we are reclaiming the monthly trail, and we're also reclaiming the low of this distribution. So if we looked at this as a massive distribution range, where is my Fibonacci tool here? Here we go. So if we look at this as a Fibonacci range here, the middle of the range would be around 1900. The low of the range would be around 1700. We've already reclaimed the low of that range, and we're heading towards the middle. So if it doesn't instantly fail the middle of that range, you would be leaning bullish long-term into that 2000, possibly 2100 high, kind of where that seller quadrant is on the upper bound there. So look for the break of this 1880 middle of the range, and then you're looking to be a seller possibly around 2000, maybe 2100 on gold. But for the longer term guys, the guys who look at the monthly or higher, I'd say as long as this holds on to like 1700 to 1750, this does not look like a bad buy. You have this kind of buyer level down here that is being protected. You had a very strong monthly candle in November with a little bit of confirmation on December. Not the greatest December close, obviously topping out a little hard up here, but you are still closing back above that monthly trail. Okay. All right, last but not least, let's go take a look at some dollar pairs. So let's look at Dixie here. Let's start off on the daily. So the daily for Dixie has been selling off pretty hard since the end of September. You can see the trail flipped red on October 28th, and we've been selling off basically ever since. So we lost the 200 daily average at 105. We are trying to bottom out a little bit here. It does look like it wants to go for a bounce, possibly into 105, maybe 105.50. But we've been in a bearish impulse for almost 1.5 to 2 months here. So definitely not looking too good. Let's go to the weekly. The weekly trail has been red since November 28th. Once again, it does look like it's ready for a bounce, possibly back into that weekly average around 107 to 106, but it's just not showing any signs of the actual bounce, the confirmation just yet. Now, if we lose this support on Dixie, we kind of have a little bit of support on this pullback right here. It started that major impulse up. If we lose this support, there's a couple of levels to watch here. We have that level at 104, then we have that low around 101. If we lose this high, it will very likely retrace this value back into 101 to 102. Okay, that would be pretty bullish for ES if the correlation comes back. Currently, the correlation with the dollar and ES is not very strong. It's not very tradable. So we would need that correlation to snap back to say that that would be bullish on ES. Now, going back to the monthly, we are approaching a major support pretty soon. If we zoom out for the last, 7 years, Dixie has been topping around that kind of 99 to 100 level, and now we are coming back into that level as support. We could even zoom out even further, and there's a couple of top levels around 98 to 2000. Those are pretty heavily outdated, but around that same area, we have been consolidating and topping out pretty aggressively. So this will be the first major retest of this support on a longer time scale that we've seen in 5 to 10 years. So definitely a major level coming up for you longer term forex traders. So keep an eye on Dixie on that retest of 100, possibly 99 to 101. Moving on to the euro here. Let's look at the euro dollar pair. Let's go back to the daily for a sec here. So we are seeing a pretty nice impulse on the euro ever since October. You did break the 200 EMA on the daily back in November, and we've tried to kind of have a bullish impulse above that level, but it's not finding a lot of buy pressure above that 105 to kind of 104 area. So we really do need to see price break this previous high that kind of started this bearish impulse. You had a major bearish impulse going from 107 all the way down to 95, and that was started right where we are right now. So a lot of resistance in this kind of 105 to 107 area. If we can start holding above that level, then we could start looking at a weekly to monthly basis of resistance. So maybe 109, maybe even 111 as our weekly targets. And then if we go to the monthly, we do have a very long-standing monthly pivot trading at 107. Once that breaks, you do have the monthly trail around 109. Once that breaks, we would be reclaiming this entire range low dating back 7 years. So If we can reclaim this little bit of resistance on the euro long term, this entire range low would be reclaimed. And we could look at this on our Fibonacci tool as we did earlier. And we could once again say, watch the middle of the range, which would be around 114. And then you would be a seller in the upper zone around 120 to 125. Obviously, once again, this is on a monthly basis. This is not going to happen very soon. This will happen much farther in the future. But if we do reclaim that range lower, which we're currently trying to do, there's a lot of resistance around this quadrant point around 108 to 109, 110. Start reclaiming that. I would be pretty bullish into the middle of the range around 114 and then possibly 125. If the euro re-loses 103, this range low right here, that would be pretty bearish. And that would also be bearish for ES if the correlation comes back. Okay. But all right, guys, that was a very long video. Typically, we keep these summary markets pretty short. We will be back to the normal summary of markets on Sunday. So we'll go back on Sunday and we'll talk about the weekly trade plan on a much smaller time scale. Typically, we look at like a 30-minute to a daily for you guys that are not up to date with my summary of markets videos. But this video came out a little late, so we wanted to give you guys a longer term aspect on all the indexes that we like to watch. But if you guys like this video, make sure that like button does help a lot on YouTube. I will be streaming my normal time tomorrow at 9:30 in the morning. So if you guys want to stop back by, I will see you guys tomorrow. Have a good rest of your day. See you guys in the morning.